They've been mocked, doubted, and called delusional. While other crypto communities jump from one hype coin to the next, one group stands firm, unshaken through every crash, every headline, every cycle. These are the Cardano holders. While the world screams sell, they quietly accumulate. While the media writes them off, they build. And there's something you might not understand until you see what they see. Because Cardano isn't just a cryptocurrency to them, it's a mission. So why do Cardano holders refuse to sell, even when fear grips the market? Let's uncover the truth, and once you see it, you might not look at Cardano the same way again. Cardano, the blockchain that's been called everything from the Ethereum killer to a ghost chain. Founded by Charles Hoskinson, one of the original co-founders of Ethereum, Cardano was designed with a different vision: science first, hype second. It's slow. It's methodical. It's academic. And that's exactly why the people who believe in it, really believe in it. While other chains rushed to market with half-finished products, Cardano spent years developing peer-reviewed, research-backed technology. Critics called it over-engineered. Supporters called it the future of blockchain done right. But through bull markets and brutal crashes, one thing stands out: Cardano holders don't sell. They're not just investors, they're believers. So today, we're diving deep into the psychology, the technology, and the conviction that makes ADA holders so different from the rest of crypto. To outsiders, Cardano looks like just another blockchain project, a smart contract platform trying to compete with giants like Ethereum, Solana, and Avalanche. But to its community, Cardano represents something much deeper: a rebellion against how crypto lost its soul. To understand why Cardano holders refuse to sell, you have to go back to its origin story, to Charles Hoskinson, a mathematician turned blockchain philosopher. He was one of the original co-founders of Ethereum, but he didn't see eye to eye with the rest of the team. They wanted speed, get it to market, move fast, innovate quickly. Hoskinson wanted precision, a blockchain that was mathematically sound, peer-reviewed, and built like critical infrastructure, not like a Silicon Valley startup. He walked away from Ethereum, determined to build something different. Something that could last 100 years, not just pump for a few seasons. That's how Cardano was born. Named after the Italian polymath Girolamo Cardano, it was built on the philosophy of slow, deliberate, academic development. Everything about it would be formal, reviewed, and proven. No shortcuts. No reckless experimentation. That decision would define Cardano, and its community, forever. Because while other blockchains raced ahead, Cardano seemed to move at a snail's pace. It didn't have flashy launches. It didn't chase the latest trends. When DeFi exploded, Cardano was still finalizing its smart contract infrastructure. When NFTs became the craze, Cardano was still focused on stability and governance. The critics mocked it. Too slow. Too late. Too academic. But for every critic, there was a believer, someone who saw beauty in its methodical approach. Someone who said, "I'd rather own the blockchain that gets it right than the one that gets there first." These people weren't traders. They were builders, thinkers, and idealists. They saw in Cardano a long-term vision, a blockchain that could serve the unbanked, bring identity to those without access, and provide financial freedom to the developing world. And that's what makes Cardano different. For its holders, ADA isn't just a coin, it's a statement of belief in how blockchain should be done. Imagine watching your investment drop 90%, yet refusing to sell because you genuinely believe it's part of a greater cause. That's not normal market behavior, that's faith. And faith, when combined with reason, becomes conviction. When the bear market hit, the Cardano community didn't vanish. In fact, it grew stronger. Developers kept building. The ecosystem expanded. More than 1,200 projects started emerging: decentralized finance apps, identity solutions, gaming platforms, and even national-scale partnerships. And while the rest of crypto was in chaos, Luna collapsing, FTX imploding, DeFi protocols being hacked, Cardano stood untouched. Its network uptime was flawless. No rug pulls. No scandals. Just quiet, steady progress. It's this resilience that reinforces belief. Cardano's holders have seen every storm, and every time the market doubts them, they come out stronger. Part of this comes down to how Cardano is structured. Its staking model is one of the most decentralized in the industry. Over 1 million wallets participate in staking, meaning the power isn't concentrated in the hands of a few validators or whales. It's distributed among ordinary people, people who believe in fairness and community governance. This is what draws in the long-term holders. They're not just investors hoping for a price surge, they're stakeholders in a movement. Every ADA they hold represents a voice in how the network evolves. It's democracy on the blockchain, something most other projects can only pretend to offer. And that philosophy, that feeling of ownership, runs deep. Because when you're part of something you helped build, you don't sell it for a quick profit. You nurture it. You protect it. You watch it grow. Let's talk psychology for a moment. In markets, there are two types of people, speculators and believers. Speculators chase momentum. They're driven by dopamine, the thrill of the trade, the rush of the pump. They want 10x overnight, and when it doesn't come, they move on. Believers, on the other hand, think in decades. They don't care about the noise. They care about the mission. They understand that technology adoption doesn't happen linearly. It happens in sudden bursts, years of quiet building followed by explosive recognition. Cardano holders are believers. They've internalized the idea that revolutions take time. That the most powerful technologies, from the internet to the iPhone, weren't built in a year. They were built brick by brick, over years of patience, skepticism, and persistence. And that patience becomes a moat, a psychological shield that keeps them from panic selling during downturns. Now, let's look at what fuels that conviction. While traders chase whatever's trending, Cardano's roadmap continues to move forward quietly. Its Hydra scaling solution is in development, promising to increase transaction throughput exponentially. The Voltaire era, focused on full decentralization of governance, is underway. And the ecosystem continues to expand across the globe, especially in places that traditional finance forgot. In Africa, Cardano is being used to create digital identity systems for students in Ethiopia, giving them verifiable credentials stored on the blockchain. In Kenya, farmers are using Cardano-based supply chain tools to prove the authenticity of their crops and secure fair prices. In other regions, Cardano is supporting micro-lending platforms and decentralized education networks. These aren't speculative use cases, they're real-world solutions that take time to mature. And that's the key, time. Cardano's entire philosophy is about long-term sustainability. It's about building a blockchain that doesn't crumble under hype or greed. That's why its development is peer-reviewed. Every improvement, every update, every protocol change goes through a formal process. It's not sexy. It's not fast. But it's safe. Compare that to the chaos of other chains, rushed upgrades, security breaches, exploit after exploit. The same people who mock Cardano for moving slowly often find themselves victims of projects that move too fast. The holders understand this. They've learned that slow, steady, and secure wins in the long run. And maybe that's why Cardano feels different, because it's not just a blockchain project, it's almost a philosophy of patience in a world addicted to speed. In an era where everything is instant messaging, instant shopping, instant returns, Cardano is a reminder that the best things in life aren't rushed. And for its holders, that's part of the pride. They wear their patience like a badge of honor. They've been through ridicule, bear markets, and brutal corrections, yet they stand tall. Because deep down, they know what they own. One ADA holder once said online, "We're not here to make a quick buck. We're here to change the financial system." And that mindset echoes everywhere in the community. It's not about charts, it's about change. Now, it's easy to call that idealism. But history tends to reward the idealists who endure. Bitcoin holders were once ridiculed too. In 2013, when Bitcoin crashed from $1,000 to $200, everyone said it was finished. Those who held on changed their lives. Cardano holders have seen this pattern before. They know markets move in cycles. They know fear and greed repeat endlessly. And they know that what really matters is staying in the game long enough to see your vision realized. That's why they don't panic. They don't flinch. They accumulate. Even as the market mocked them, they kept building stake pools, launching new dApps, and improving the ecosystem. When critics called it a ghost chain, Cardano developers quietly rolled out upgrades like Facile, increasing performance and reducing costs. That's not the behavior of a dying project, that's the persistence of a community with unshakable belief. And there's another layer to this conviction: identity. Cardano has become more than an investment, it's a culture. A movement built around rational optimism, the belief that blockchain can be ethical, inclusive, and sustainable. The ADA holder isn't chasing Lamborghinis, they're chasing legitimacy. They want to prove that crypto can be built with integrity, not scams, not speculation, but real science and social purpose. When you invest in something that aligns with your values, you form an emotional connection. You stop thinking in dollar signs and start thinking in impact. You start saying, "I'm part of this." And that's why it's so hard to sell. Selling feels like giving up, not just on the coin, but on the belief that something better can exist. In a way, Cardano has created a new kind of investor, the mission investor. Someone who values progress over profit, who can endure pain for purpose. And ironically, that might be the strongest form of wealth creation. Because markets always reward conviction in the end. There's an old saying, weak hands build wealth for strong hands. Every time Cardano crashes, weak hands panic. Strong hands hold. And when the tide turns, the strong hands win. And it always turns. That's what history tells us. From Bitcoin to Ethereum to every major technological shift, the doubters are always loudest before the breakthrough. So why do Cardano holders refuse to sell? Because they've already seen the script. They've lived through crashes. They've been mocked before. And they know that belief, patience, and persistence always outlast hype. They know that one day, when Cardano's real-world adoption finally matches its vision, the same people who once called it a ghost chain will call it genius. Until then, they'll keep building. They'll keep staking. And they'll keep holding. Because when you truly understand what you own, when you believe in its purpose, its vision, and its integrity, you don't sell during the storm. You hold. You endure. And you wait for the world to catch up. That's what makes Cardano different. And that's why its holders, no matter how many times the market tests them, refuse to sell. As of now, Cardano continues to evolve with Hydra, its Layer 2 scaling solution, promising thousands of transactions per second. Developers are launching Midnight, a privacy-focused sidechain. And the ecosystem is expanding rapidly across Africa, Asia, and Latin America. While others fight over who will be the next big meme coin, Cardano quietly continues to build a digital infrastructure for billions. Hoskinson himself recently said, "We're not here for a season, we're here for a century." That single line sums up why Cardano holders refuse to sell. They're not traders, they're builders of a future they believe in. There's a story that circulates in the Cardano community, about a man who bought ADA in 2018 at just 3 cents. He watched it rise to $1, crash to 10 cents, rise again, crash again, and through it all, he never sold. When asked why, he said, "Because I didn't buy Cardano for what it is today. I bought it for what it's becoming." And that, right there, is the heart of it all. Cardano holders aren't waiting for the next bull run. They're waiting for the moment the world finally understands what they saw from the beginning. Because to them, Cardano isn't just a cryptocurrency. It's a vision for how finance, governance, and technology could actually serve people, not exploit them. And if that vision ever truly comes to life, those who refuse to sell will be remembered not as bag holders, but as the pioneers who held the line when no one else would. Thank you so much for spending your time with me today. I really appreciate you watching. If you found this useful, a like would be fantastic, and subscribing helps me keep creating content you'll hopefully enjoy. Please share your experiences and any questions in the comments. I always try to read and respond. Your support keeps this channel going. Until our next video, take care and have a wonderful day.